Okay, so today is 2019 November 4th. Okay, and finally we are the U.S. financial market changed to the winter session. So there will be some change of the starting time, like the stocks opening time will change from 9:30 to 10:30 if you are in China or in Singapore. Okay. And last Friday, there's a non-farm payroll event shows that the labor market of the USA is still good. Okay, and we saw, let's just update some markets, right? So this is oil. Okay, the oil's 4-hour chart. We can see a beautiful rally from 53.60, followed by this, what do we call it? This is our inside bar, right? And besides this inside bar, and we still have this 1.272 extensions. Okay, so this is actually a combination trade. It's a Gardy, all right? The Gardy patterns that are hits into the fib extensions and followed by your inside bar and then price rally like a rocket. If you catch this bullish trade, congratulations, and you can still hold because just now the oil breaks new high, and hence we know that the oil will not going to stop here, but it will keep rally until about 60 or until about 61.40 this place. Okay, so the first trade I'm going to highlight is this oil's potential long trade. If you didn't enter, all right, I will show you how to re-enter the trade or how you catch the next following move, right? This move, this is what we want to catch. Okay, because now it's still it's a 56.90. Okay, there are still about 200 pips that's going to be win, right? So in daily chart or in weekly chart, okay, we can see that this is a beautiful breakout, okay, because if you measure this 56.89, that is a previous high of this candle, right? And if you measure that this bar here, the highest place is about 57.02. So tonight is very important for us to observe the behavior of the oil that are the 57 even handle, right? If the oil can break 57, that is a confirmation that oil will continue move up. Okay, so we want to buy the oil. We want to capture the next rally. Okay, so let's go to the lower time frame. Okay, 1-hour chart. What do we see, guys? We see a strong bullish move. Okay, and followed by a correction, and another strong bullish move appeared, and just retest here 56.57, but not too deep until our entry price is here. Okay, so what we can see is we can use these patterns for us to catch a buy trade, which will be the price will be about 56.32 to 56.40. Okay, so you can make use of this structure breakout pullback trade, right? Because this represents the selling force here, okay, and last Friday, okay, because the oil tried twice but cannot break 56.40 and retrace to 55.82 and then rally break out this place. Okay, so of course we don't want to chase the price at this place because we know 57 is going to be a resistance. Neither we don't want to short based on the 57 resistance because the whole trend is still up. Okay, so what we can do is we can wait for the price to jog back to 56.40 level, and then we enter a buy. That is an ideal entry level. So if you understand this trade idea, please type 5. Okay, I want you guys to focus on buying low. Okay, buying low because we know the trend is going up. We know the daily candle was pierced and getting a high. So the only strategy we want to use is to buy the low. Okay, buy the dip. Okay, buy the pullback. And where is the pullback? Where will be the pullback most likely to happen? Okay, use the structure. Right, look left, 56.34 to 56.40. will be an ideal entry price. And if you do this pullback buy, you can just simply put your stop loss at here, okay, at here, because that is the origin of the whole rally, correct? Yeah. So we are making this as our risk distance, okay, and we are getting aim to like 59 or 60. So the overall risk and reward ratio will be very good. Okay, in this case will be at least like 1 to 5 or 1 to 6. Okay, so you need to wait for the pullback to here. And some students may ask, so Jack, what happened if you didn't give a pullback, right? Will you have this doubt? What happened if it didn't give the pullback? It just keeps getting ready. So how do we enter the trade, right? So let's go to the even smaller time frame. Okay, let's say 30 minutes. Use the what do we see is, okay, this is a previous top here, very small top, okay, and now the price is trying to get over here, right? Okay, so the 57 is also a very important structure. Okay, and now we can see, yeah, the candle is the buyers is getting very strong, and they want to, you know, get rid of this level. So if the oil didn't pull back here, okay, but make new high and break 57, and then we can make use of this latest structure here. Okay, so what we want to see is, we want to see a strong bullish candle. Okay, like this. Yes, very good. This is a very nice breakout, right? Okay, so since it has break new high, see here, right? Just 10 seconds ago, the oil breaks new high. Okay, and let's check the time. Now it's 10 o'clock. Okay, 10 o'clock. But in the U.S. session, the oil, the New York session will be 9 o'clock. That is opening hour of this oil. Okay, of this oil, crude oil market. So we want to see that in 30 minutes time, we have another 18. Yeah, this is a 30 minutes chart. So we have another 18 minutes to confirm whether this is a firm breakout. Okay, so if, okay, let me just type, okay, if at 10:30 Singapore time or 9:30 New York session, oil closed above 57.00, okay, we want to buy the pullback at 57. Okay, we have to wait the confirmation, like there's another 17 minutes. Okay, just wait for this candle to be closed. If this candle can close outside, okay, definitely we want to buy the pullback tonight. All right, and where's our stop loss in this case? Should I put my stop loss below here, still 55.74? No, you just need to put your stop loss at here, 56.54. Okay, but the key thing is, you don't want to, please do not enter the trade right now, because if you enter the trade right now, you're not see the confirmation yet. Okay, so wait for the closing candle of this 30 minutes. If they close outside, next candle, there's a pullback, you just go for it. All right, so this is a plan B. And I think we are going to use the plan B. Unless in 30 minutes charts, it closed still below the 57 structure. And you can see, oh, maybe this is a false breakout. We don't want to chase the price to buy the high. We want to wait for the 56.34 level to buy. Understand? Are we clear? And bearing this in mind, you can even go to 5 minutes, okay? Because in 5 minutes chart, it's just the candle just break out, right? You can check in every 15 minutes or every 30 minutes to see whether the price can sustain above 57. If it does so, okay, wait for the pullback to buy. Okay, are we clear? Yeah, I think the oil just makes a very nice breakout. Yeah, and most likely in 30 minute charts, we're going to see the yeah, the outside return, outside this structure. So wait for the pullback in the next 30 minutes, okay? Like a candle or a wick test this structure, and you just go enter for it, right? Yeah. So are we clear? If you're clear, please type 6. Yeah, just want to see whether you guys are following my mind. You can get it, understand what I'm talking. All right, good. Okay, let's go to gold. So the last week, the gold has a test of 1514 and followed by a pin bar after the non-farm payroll is here, this pin bar. And I'm telling you guys to short up the pin bar, right? Okay, and I'm not going to change its mind because the gold didn't really break out 1517. So this structure still maintains, right? So this structure maintains. What does it tell us is the gold is hard to break this level and it's likely to go back to 1496. That is a very possible trade for the gold. If you go to the daily chart, okay, daily chart, the price is sideways around the 618 level, right? You can also wait for the 618 to short the gold, okay? Although the Fed cut the rate last month, but from the non-farm payroll data, we can assume that the labor market is good and the Fed is not going to cut the rate anymore in the before the end of this year. So the news are almost 99% absorbed by the market. Okay, so although the dollar getting weaker, but the gold is hard to get any strength from this level. Okay, so gold, we want to focus on selling high. You can make use of this 1519 or make use of the structure here. And based on the price action here, you can see that this is a very strong test. Okay, the bulls failed to break new high. Okay, and the sellers are coming from this side. So you can use this maybe find a pullback to sell the gold. That is scenario 1. Or you can wait for the gold to break this level. Pay attention to this origin of this Madobudo bar here. Okay, the 1508 level is very important because this represents the last barrier of the buying force. Okay, so if this place was taken out, was break down, you have to wait for the pullback to sell. All right, and if we are bearish on gold, what we can do is we can check the S&P. Okay, the S&P will be bullish. You see here. Okay, and in the non-farm payroll day, the S&P actually makes very nice breakout here. All right, breakout, pullback, and buy from 3K05, and all the way now is 3083. Okay, so I'm still bullish on the S&P, and I think from the S&P it will actually go to touch the ABCD move all the way to 31K. Okay, so the S&P, we know that is the bullish target is here about the 3100, and now it's 3083. We still have some room for us to catch the uptrend. Of course, the best buying opportunity is waiting for the pullback about 3060, and then you have about $50 to capture the win. Of course, for tonight, you see the S&P, the futures just breaks new high, so we have to use this place for us to, yeah, you can try to buy this pullback and aim higher. Okay, because the still is it is an extremely very bullish uptrend. Okay, the price just keeps making higher, and from the candlestick patterns that you can, yeah, we hardly can see any sellers. See, the sellers is very weak. All the people want to buy. Okay, so S&P focus on buy for today. All right, and aim 3011. Sorry, 3100. That is our target for the S&P. Okay, before the price hit this place, you can always buy in the pullback. Aim here. Once it touches this zone, you can sell. You can close your positions. Maybe a strong pullback will happen. A strong reversal will happen. Right. So this is for the S&P. Let's go for the euro. The euro didn't really break 1.1170, so we can use this level for us to sell the euro. Okay, right now the euro is facing a choice. Okay, facing a two-way. The first pass is for the euro to get above 1.1190 and pull back and then go to 1.13. This is the first wave. Okay, the first scenario. Second scenario is the euro didn't break 1.1190 and break down this uptrend line, and it will actually become a reversal. Okay, so the euro, we want to take a sell right now because from the price action tells me that the seller is really strong. See, first time, second time, third time didn't really break out, right? There's no lacking of the bullish momentum for the euro at this point. That's why we can sell the euro right now. And if you see here in 4-hour chart, this is a inside bar breaks down, right? So inside bar breaks down, you can just take this trade, put your stop loss above 1.1176, okay? And aim 1.1120 and even lower 1.1090, and then you're just waiting for a pullback to sell again. This is for the euro. Okay, the euro key resistance from 1.1176, and we want to see whether it can break this uptrend line or not. If it can break this line, pull back, you can sell another tranche. Okay, let's go for the sterling. Okay, sterling is sideways. Didn't really pulls back a lot. So the sterling still quite strong for this week, and I want you guys to focus on buy the low at 1.28. Right, this place is going to be very strong of the buyers. Right, if you want to sell, you can try and then put your stop loss above 1.32. Okay, that's also a good chart. If by the from the market, you can see the buyers failed to create a higher high, and the price already getting making a top here. So you go to 30-minute charts, you can see the sterling. Yeah, it just breaks down, right? So you can use the 618. This will be a 618 trade of the sterling 30-minute charts. Okay, so wait for the pullback to 1.2949. All right, here, and you take a short. The aim lower, aim 1.28. That also will be a 150 pips gain from this chart, right? This is a 2618 trade for the sterling. You can consider as of today, right? A double top breaks the neckline, right? This is neckline. Okay, neckline was broken. Okay, wait for the pullback. Sell here, stop loss above the high, and aim lower. Ready? Okay, so that's a good trade for the sterling in 30-minute charts, and you can wait for the price to come to 1.2780 to consider to buy it again. Okay, let's go for Aussie dollar. Okay, the Aussie still stay above 0.6880, and I said in daily chart, if the Aussie can maintain above this neckline, you're actually getting a strength until 0.70. Okay, so you can still buy the Aussie, okay, because the price is sideways here, and it's still, generally speaking, still in this uptrend move above this trend line. So the Aussie after the sideways, most likely it will actually breaks out and go to 0.70. Okay, so find pullback to buy the Aussie for this chart. Okay, but the Kiwi is the same. Kiwi also strong, but Kiwi didn't really sustain above this structure. So maybe the Kiwi is a little bit weaker than the Aussie. I think because this is a very similar pairs. So if you are wondering which pair you want to long, I think you have to choose Aussie rather than Kiwi. Okay, the Kiwi is weaker than the Aussie. Because we check the Aussie Kiwi chart, you can see here the Aussie Kiwi is like, still generally in this uptrend move. Okay, and the neckline is about here. It's a neckline for the Aussie Kiwi chart. So the Aussie Kiwi may rally to 1.1050. Okay, that shows that the Aussie is stronger than the Kiwi. So if you want to buy the Kiwi, you can put your money to consider to buy the Aussie to gain a more stable profit. Right. Okay, let's move on to dollar Canadian. The dollar Canadian I ask you guys to pay attention to 1.3180. This is a structure of the last breakout here, right? And from the price action is still below the structure, so we can still use this structure to sell the dollar Canadian to get another wave down. Because in weekly chart, the dollar CAD has already broken the trend line. That is a very long-term trend line. You see here, okay? So if the price failed to getting higher than this level, it will actually come down very fast, okay, to 1.27 maybe, and that actually implies the oil will have a very strong rally. If we put into this coordination from this the correlation between the oil and the Canadian dollar, right? So I'm bearish on a dollar Canadian as the structure was broken, the trend line was broken, so pull back, we can sell, put your stop loss above this pin, right? And we want to see whether we can have a like 500 pips or 600 pips move. Jack, is it right to say that dollar Canadian moves in a similar trend as that of dollar DXY? Okay, the dollar Canadian, if you want to see the correlation, right, you just need to add the two charts together. Okay, so let's just compare, right? You can compare, and you actually see this difference or similarities. Okay, so yeah, generally speaking, because the dollar Canadian, the the base currency is dollar, right? So it will have at least 60% or 80% similarity of the dollar index, right? Because when dollar index getting stronger, okay, the dollar Canadian is also getting stronger, right? But from the chart you see here, there are some difference between these two things, okay? Because when dollar Canadian, let's say, you can see here when the DXY getting lower or getting sideways, the dollar Canadian still keeps rallying. Why? Because the Canadian is weaker, right? Is very weak. It's weaker than the dollar. Okay, and when the DXY finds support from 88, but the dollar Canadian finds support earlier than the dollar index. See, the dollar Canadian rally from here and now is still above this 1.2095. However, the DXY didn't really do that. It actually breaks new low here. Okay, so I can say when the Canadian dollar is sideways, so these two things will move together. Okay, just think of this way, because in the last webinar I explained the Forex is kind of a mathematics, right? So dollar versus Canadian, you can just think this is a mathematical equation. Okay, so if you fix this variable and let the dollar move by itself, what you can assume is the dollar Canadian will move same as DXY, correct? Because the dollar moves up, the dollar Canadian moves up if the Canadian maintain the same. Am I right, Nicholas? Okay, but if you take in consideration of this fluctuation of the Canadian dollar, right? So the dollar the dollar didn't change. The dollar didn't change. Let's say that if the DXY is fixed, right? If the price of DXY or the volatility of the DXY is fixed, so the only factor that can affect the dollar Canadian price will be the Canadian dollar. And what will be the Canadian dollar most correlated to will be the oil price. Am I right? Okay. So you can see there are two factors that you need to take into considerations. Okay. So generally speaking, when oil price is stable, the dollar CAD moves similar, very 90% similar as dollar index. But when the oil price fluctuates a lot, right, this will actually have a very large impact of the dollar Canadian price, and this will differ the chart of the dollar CAD versus DXY. Okay, so let's just take into another chart, let me just merge the oil chart here. Okay, and you can see the impact of the three things. Okay, the DXY is also is of course very powerful to decide the dollar Canadian price, but the Canadian is very correlated to the oil price, right? So you can see here when the DXY is fixed, is ranging, right? DXY ranging means that the dollar didn't move. However, the oil drops a lot. That's why the dollar Canadian, you see, rally so much. Okay, when the oil is sideways here, you see, so it's about a 1 year sideways. Okay, and then the dollar Canadian is also sideways if the DXY is sideways. But when the DXY getting downtrend, you see, the dollar Canadian also moves down. And then the oil have a very strong rally here. Okay, however, the dollar is getting also strong, so this actually cancel each other. That maintain the dollar Canadian is not a very strong trend, but you know, it's a up down move. Okay, so you have to take into this two factors: is both the dollar's move and also the oil's move. And what we can see from the of the future is that the oil is likely to getting higher. See, and the dollar index may still maintain the same because what the Fed is going to do is highly predictable. All right, or like it's just like the last month when the Fed is the cutting rate about 0.25%. You see, 99% of this news was you know, it's already priced in. Okay, so the dollar index may still sideways. So if you see this happens, the oil goes up, the dollar maintains the same. What will happen to the dollar Canadian? Yeah, the oil goes up, the Canadian getting stronger, and this is dollar Canadian chart. Most likely the dollar Canadian will have a drop because the Canada dollar is getting stronger, right? Right, and there's also another possibility if the dollar getting even lower, if the dollar getting lower, the oil getting higher, yeah, that will accelerate the downtrend of the dollar Canadian. Right, there's only another scenario is when the dollar getting higher. If the dollar getting higher, the oil getting higher, and then maybe the dollar Canadian will be sideways. So there are three scenarios, right? Okay, and out of these three, two scenarios support the dollar Canadian going down. So that's why I said, yeah, it's a very high chance that we can capture this dollar Canadian's downtrend move because the oil may go up, the dollar may go down or even sideways, okay? And oil will go, and the dollar Canadian will go down. Okay, good. So this is the logic after we picking up this trade, okay? And thanks, Nicholas, for asking me these questions, and I can explain to you guys. Yeah, Charlie, you okay, right? I think you understand. So this is the correlation between the different markets. Okay, so oil is you know, is a future market. Oil is commodities. Dollar index is a basket of the currencies, and dollar Canadian is a relationship between U.S. dollar and Canadian dollar. Okay, and that actually I explained what I explained is actually tells you the logic or the correlation or the fact, okay, between these three things. Okay, good. So let's move on. Let me just delete this. Okay. I have touched the S&P. Let's just look for Hong Kong index because some people may want to trade Hang Seng index. Okay, it's especially for the Asian clients. Okay, so I will just make some analysis of Hang Seng. Okay, the Hang Seng in weekly chart has just completed this Gardy patterns, right? And what we can see here, right, just for this week, is actually for today, because this is a Monday, the first day of this week, what we see is a strong breakout of the bar of 27368. Okay, so after the guardian pattern, if you see the price make the first rally and make the second rally and just breaks this neckline, what we can assume is the price will continue going higher. Okay, and it will at least touch the 618 level here to 2833. And if we see more in the higher picture, okay, that is what we can expect from the harmonic patterns view, because this is a bearish Gardy patterns and this is a bullish Gardy patterns. And after this bullish Gardy pattern, the price may rally to the completion point of the bearish one that we call the combinations. Okay, so anyone can tell me where is the money, which direction you want to choose, and what kind of a pass, what kind of a move you are expecting the Hang Seng. Do we have the confirmation signal of this breakout? Yes, we do, right? Do we have this possible target? Yes, we do. And is this profitable trade or not? Yes, big money, about 5,000 pips. Okay, from 27K to 32K, it's about 5,000 pips. And maybe you are just risking this much, like, you know, you just need to put your stop loss below 2640, maybe, yeah, below this pin bar here. And you can, if you can get here, that is a risk reward ratio 5-to-1. Okay, so I want you guys, if you can trade Hang Seng Index, okay, tomorrow you can find pullback to buy the Hang Seng. That will be a very strong move, because you know the Hang Seng Index that is very highly correlated from the China market, right? And if you can see the Shanghai Composite is also getting in this bullish continuation patterns, right? This is a squeezing wedge, and most likely we're actually getting higher highs after this breakout and the moves to 32,000. Okay, so I'm a bullish on Hang Seng, and I think the bullish just starts. So I will highlight to you guys. What's the ticker on next trader for Hang Seng Index? Oh, you can just go to the indices. Okay, in the indices, it's under indices, and I cannot remember the group. Okay, in the indices, we actually you can just check. I think it's Hong Kong, Hang Seng HSI or Hong Kong. Yeah. All right, go for let's talk about the Bitcoin. Okay, the Bitcoin have a strong rally from here, from the 618. The overall 618 here about 7-40. Okay, and followed by inside the bar. Now the price is upside and followed by sideways. So I'm still waiting for this Bitcoin to get back to the neckline or for the 618 level. See, very close. Okay, so pay attention to 88,000 to 85,000 to buy the Bitcoin. Will be give you a very nice trade to enjoy the next rally. Okay, if you have a short from here, you can close Hello, hello, hello. Yeah. Okay, sound back. The audio is back, right? Okay, good. All right, so let's finish the Bitcoin. If you can hear me, okay, I just said wait for the 88, 8K, 8.8K to 8.5K to buy the Bitcoin. There will be a rally about 3K or 4K move for the next wave. Okay, this is a bullish pattern. And if you are holding some seller position here, take some position, take some profit first. All right. Generally speaking, the Bitcoin sideways too much. So after this sideways, 1, 2, 3, 4, 5, 6, 7, right? So about 2 weeks sideways, there will be a very strong move in the next wave. Okay, so just getting ready to buy the dip. Okay, so for the Ethereum, you can buy the Ethereum right now because it has already pull back to the neckline here. So 176 is very nice base for the buyers. You can buy the ETH right now because it already find the support from 176. Okay. For the LTC, you can also buy some because the neckline is here. It's easy for you to set the stop loss of the LTC. Just need to set loss below 48. Yeah, 48. So as long as the LTC cannot break new low, you just want to hold your buy position all the way to back to 100. Okay, because their 618 level is about here. Yeah, 107. So I think that for the LTC, what you can capture is this. Okay, Euro yen. Okay, sure. Euro yen is bullish, right? So we see this upside move already starts, and now it is still above this neckline. So make use of this neckline to buy the Euro yen. If you've already bought from this level 1 to 120, right? You can still hold, but just to pay attention that there will be some sideways because when the euro goes up, dollar yen, if dollar yen also goes down, the euro yen will be sideways. So pay attention to 1 to 1.50. You can use the buy low and sell high strategy in this range, but just get ready when the breakout happens. You have to follow the trend. Okay. Although I think this will not going to happen. Okay, because yen will be the weakest currencies in the next few months. So just pay attention to this, okay, to this breakout and then buy. Right, you can buy from the 120 will be best. If you can buy the breakout after this 1 to 1.50, that's also good. All the yen will be the same. Yeah, all the yen pairs. Okay, listen carefully. I'm bullish on all the yen pairs. Because Aussie goes up, the dollar yen maintain the same, the yen pairs will goes up. See, that is a very, very big double bottoms. So from the double bottoms, you actually push the price back to like 77. So there are 300 pips gain from the Aussie yen. Sterling yen the same. Okay. At 0.002, I bought though what? Huge amount. Can you just check it? Hold it. What do you mean? DOGE USD. What is that? Oh, dot coin. Okay. Is it? Let me just check. 0.002. Ah, okay. Yeah. Yeah, you can buy, but I don't recommend to buy into huge positions. That is overtrade. Yeah, you can buy. I think it's DT, right? Yeah, that'll be clearer chart. Yeah. Okay. So all you need to do is watch this level. You don't want to see the price to turn around and break this inside bars low. Okay. So yeah, just watch this level. If this level is sustained, you can hold your allowance all the way to like 0.027 maybe. Yeah. Yeah. If you trade the inside bar, you should already reached the 2 to 1 risk and reward ratio, right? So take some positions, coming back, you add it back together. Okay, but the hard stop loss is here. Okay. At hand, before you ask me the sterling yen, you have to tell me where's your positions. Are you holding buy? Are you holding long? Or are you holding short? The sterling yen in daily chart is sideways. Okay, it's still sideways because the sterling dollar is sideways. Okay, so we have to wait for the directions to be chosen of the market. It's either a breakout and pullback buy or a breakout down and pullback sell. Okay, right now there's no much trading opportunities because it's in the middle, unless you can bear the huge stop loss like 200 pips. You can buy now, stop loss below here, but that will be not very good. There's a bearish bet. See here, let's just check. Bet, where is it? Well, I think because in daily chart is quite ranging, so even you trade the bad pattern, it will not give you a very big profit. Okay, the best scenario is you can hold your short from the up edge to the lower edge, right? That will be about 160 pips. Okay, so you see the price is really very ranging, right? So I don't recommend to take any new trade of the yen of the sterling yen, but I want you guys to hold the previous buy position from 131 or 137, right? Okay, so just wait for a couple of days, wait for the confirmations. Right now it's a continuation patterns, definitely. Okay, yeah, you can use the structure to define the consolidation area. You can also use the trend line to define the consolidation area. Okay, it's up to you. Okay, but I will be very interested to take the sterling yen trade when the 141.50 is taken. Oh, you pull back to 57. Okay, let's see that. Let's check. So check the 30 minutes chart. Good. This is a strong breakout, and now the pullback starts. Okay, good. 15 minutes chart. Yes, okay. Breakout, pullback. Okay. I think you can start to buy. Yeah, you can buy the oil right now. Use the FIB. Okay. Get ready to buy more. Buy one more time at a 56.80. Get ready to buy here. You can use multiple entries. You can buy one position first and then buy another position here. Stop loss below this pin. Done. Are we clear? Are we clear? Yeah. If you want to wait for the best position, best level, that will definitely be 56.80. Okay. So 56.80, I want you guys to buy the oil. But if you don't want to miss the train, you can buy it right now. Okay. You can buy right now. Okay, good. So yeah, I think that's the end of this webinar. We have covered all the markets. What I want to bring to you is still you need to focus on the patterns. You need to focus on the logic behind the trade rather than just taking the trade that I provide to you guys. Okay, I want you guys to think, right? Where will the market go? Where is the critical resistance area? Where is the critical supporting area? What will happen if the area was taken out? What will happen if the area is not taken out? And what can you do? You want to buy, you want to sell, you want to buy the low, you want to sell the high, or you want to buy the breakout of pullback, or you want to sell the breakout of pullback. Okay, that's how we become profitable traders, how we become pro traders. Okay, you see, if you buy oil right now, just now, you are already in the money. Good. Okay, so yeah, plan your trade and trade your plan. I'm going to put these recordings to the YouTube once the video is done. Okay, good. Yeah. So again, if you want to learn from me, you can go to harmonicasia.com and to join my course, take my course, become my students members. All right. The videos are all available You can learn from your home, from the internet, and you can join my future live sessions anytime. Okay, so you can go to the harmonicasia.com to check the course. Okay, so that's all for today. Thanks for coming. See you next time. Bye bye.